Welcome to my market commentary for the third quarter of 2025. Good morning. As we race into the second half of 2025, it is worth just catching our breath to think about the challenges our country and world has faced so far this year. From the problems here at home with harsher taxation policies, a sluggish economy, immigration, and stubborn inflation, to the US circus and war-burdened world. It really has been quite a year so far. Having said all of this, global markets have actually been taking everything pretty much in their stride. There is now almost a perceptible shrug every time Donald pops up with his latest announcement. It would seem that the invasions of Gaza and Ukraine are doing little to worry markets. Even the Trump tariffs are now met with a collective acceptance. Indeed, the tariffs appear to have initially helped the US Treasury income position, and the side deals that Donald achieved with countries to buy more US stuff looks quite positive for the US economy. There's a bit of inflation in the US, but currently nothing to really trouble the central bank. However, we do know that inflation is very often a delayed problem. We've now only begun to see the impact of the inflationary public sector pay rises from the end of 2024 coming through here in the UK. The same reckoning could be coming yet for the US tariffs. Ultimately, the US consumer is paying more for imports, and this could start to feed through to the numbers, I believe. If inflation in the US does tick upwards, the Fed, US central bank, is going to be very hard to persuade to cut interest rates. Donald may have thought of this, however, hence his determination to get a change of personnel at the Fed to start cutting rates as soon as possible. Watch this space. But my guess is that Donald gets his way and US markets continue to get more sugar in the form of rate cuts and tax cuts. I don't think Donald is really that bothered about inflation. This third quarter has been blissfully calm for our portfolios. Volatility has dropped considerably and a steady growth has been seen across all risk levels. We've included a longer-term 5-year historical analysis within your review this time, comparing your Thomas & Thomas portfolio against the average returns of the competition out there. We're quite proud of the results, but you be the judge. It's been really good to see the level 4 and 5 mainstream portfolios having a great run this quarter after several years of being left behind. This has been down to the weakening of the US dollar. Thanks again, Donald. Which has really helped the emerging market and Asian exports. We're very keen to see this return to normality continue. I hope that you enjoy this quarter's review, and as ever, we're here if you need anything at all. Nothing is too much trouble. My very best wishes as ever.